Imagine glancing at your phone and seeing this alert. Federal Reserve just raised rates by another 0.75%. Your stomach twists. You're paying more on your mortgage, your car loan, even that credit card you forgot about. At the same moment, news pops up about new tariffs between the US and EU, and whispers of China launching a fintech system that could reshape global payments. It sounds overwhelming, but this isn't just finance. This is your future unfolding in real time, and it all connects. Flashback a few years, I was planning a vacation, transferring cash and worrying if the exchange fee would cause me extra ramen. Now, that $1,000, 0 cents I exchange might lose 5% overnight. That's not speculation, that's real money disappearing. So I started digging into global finance. I wanted to understand tariffs, interest rates, fintech disruption, not as headlines, but as forces shaping my wallet, my job, and my money decisions. And what I found is simple. The future isn't foreign. It's your burden or your opportunity, depending on what you do next. Here's what we're unpacking today: how global tariffs are shifting manufacturing and prices, why rising interest rates could either crush your debts or choke your savings plans, and how fintech is rewriting the rules of money itself faster than most realize. Stick around. This is vital if you're earning, spending, saving, investing, or even dreaming of financial stability in 2025. Let's start with tariffs. These are taxes on imported goods designed to protect domestic industries. The problem is, every tax is passed down. When the US slapped a 25% tariff on EV parts from Europe, factory prices didn't just jump, they rippled. Suddenly your car, your laptop, even your coffee maker got pricier. Factories moved. Supply chains restructured. Mexico replaced China. Vietnam replaced Mexico. The manufacturing world became a jigsaw of new tariffs and shifting alliances, and guess what? Those changes hit retail prices, gas prices, everything. Small businesses are feeling it first. I spoke with a coffee roaster in New York. Their bean shipments from Brazil got taxed. Their margin disappeared. They passed it to consumers. Coffee went up 15 cents a cup. Millions of small shops around the world are recalculating prices right now. And next, you will too. Tariffs aren't random. They're strategic. Governments use them to pressure geopolitical rivals, especially around critical tech like semiconductors, batteries, AI hardware. This year, the US blocked chip exports to China, prompting Chinese firms to pivot toward local supply. That's a multi-billion-dollar shift, and it affects the world. New chip factories are built near you or far away in Europe. That affects jobs, rents, and your local economy. As consumers, as workers, as voters, you're part of that ripple. Now let's shift to interest rates. The Federal Reserve, ECB, global central banks, they jacked rates to combat inflation. That makes it more expensive to borrow, but it also makes saving more attractive, in theory. Mortgage rates climbed past 7% in the US. Europe is mirroring it. Personal loans cost more, credit card minimums balloon. That's debt stress. But on the flip side, that same rate hike now gives savers a higher yield if their bank has an account that even tracks with inflation. But here's the catch. Higher rates means slower growth. That means companies invest less. Hiring slows. Your job, your rent, your small business all feel the squeeze. Watch where central banks pause, because that inflection point often tells you where the economy goes next. Let's bring this together. Tariffs drive prices, rates affect affordability, and fintech breaks down the systems behind both. Suppose you're a freelancer in Germany getting paid in euros. You spend in USD. Exchange rates matter, but fintech apps like Wise, Revolut, and Chime now chop cross-border fees by 90%. They let you earn, convert, and spend like a pro, bypassing big bank fees. That's power. Now combine fintech with microlending. Apps in Africa like Tala and M-Pesa allow small merchants to secure instant credit with zero paperwork, funds deposited and repaid from phone transactions. That's economic empowerment, but it also means new folks are joining the global financial system, disrupting banks, altering local economies, and inviting new regulation. Let me share a story. Emma, a craft seller in Kenya, used to wait weeks for a payment from an overseas customer. Now she sells via a fintech marketplace, gets paid in crypto stablecoins, instantly converts to fiat, and withdraws to her mobile wallet, all in seconds and for pennies. She's not dreaming of expansion, she's living it. This is the new world. Tariffs shift business realities, rates reset affordability, fintech bypasses all old systems, they collide and combine, creating a dynamic world of opportunity and risk. So how do you position yourself? First, watch your exposure. If your job, your business, or your portfolio depends on one country or supply chain, start mapping alternatives. Are your raw materials exposed to new tariffs? Are your sales in currencies headed toward weakness? You don't need a finance degree, you need awareness. Second, manage your debt and cash wisely. Rising rates mean refinancing might cost more. If you lock a mortgage at 6%, paying it off early might be smarter than borrowing. If you have high-yield savings, ask your bank why your account pays less than 1% while rates are up. If the answer is it's old, move your money. Smart fintech accounts are paying 4-5% APY right now. Third, use fintech to your advantage. Move international fees to legacy. Invest small in algo-managed platforms. Access credit, trade stocks, build a global wallet. There's no reason you should be paying high fees for what you can do in seconds. Fourth, stay literate. Tariff news, rate decisions, fintech regulation, they shape tomorrow's world. They're not remote, they're local. Subscribe to finance feeds. Read smart analysis. Don't be passive. Finally, think globally, you act locally. Even small changes ripple. If you earn USD, spend in EUR, rent in INR, you're already living global finance. Be intentional, convert at smart times, hold diversified savings, think ahead. Imagine next year. You start your day with a rate app alert, UK bank just raised by 0.25%, your mortgage reset next month, you open your fintech wallet, see you earned 0.8% interest on EUR savings while your USD account lost 1%. You transfer to a high-yield digital account, you check headlines, a new tariff puts export fees on parts made in China. You sell local stock, shift to a US ETF, invest in gold exposure. That's global awareness. That's power. And here's one last story. I spoke with an Arizona small business owner supplying laptop batteries. Tariffs hit, he lost margin, but he didn't panic. He used a fintech trading app to hedge currency exposure, used chatbots to negotiate freight costs, and pivoted to local suppliers with financing from a peer-to-peer lending fintech. 6 months later, he's stronger, leaner, and more resilient than he was before the tariffs hit. That resilience didn't come from waiting, it came from watching the ships and being ready to act. So if you want control, create systems, not habits. Use fintech, diversify currency, track rate decisions, understand tariffs in your sector, learn one new trend every week. Stablecoins, instant settlement, regulatory licenses. Soon you'll see how global finance touches your life every day. Here's what to do next. Leave a comment with one global finance change you felt personally. Tariffs, fees, banking friction, or fintech trials. I'll share responses in the next video. Don't just watch this video, bookmark it. Subscribe, because we'll cover real stories, tools, and step-by-step guides on everything from hedging to digital banking and global investing tools. Download the free checklist in the description. It walks you through mapping your income exposures, managing rising debt costs, picking a high-yield digital wallet, and tracking global financial headlines. Markets don't wait for you to catch up. They move with or without your portfolio, but you can move with them. You can protect your money, seize opportunities, and build resilience, no matter the country you live in. Because global finance isn't distant, it's near, immediate, and personal. And the future of your money starts with knowing it and acting. So if you're ready to step up, hit like, subscribe, share with someone who needs this, and dive into your checklist. The world's changing. Make sure you're not just watching it happen. Now go build tomorrow, starting today.